An increasing number of Chinese companies are opting to list in New York's stock exchanges. More than 115 of them are listed there, as some of them have had pretty grand initial public offerings, or IPOs. While getting listed on the NYSE or the NASDAQ is seen by many as a badge of honor, it also has practical benefits like access to American markets for Chinese companies. For Americans, meanwhile, though, it's also a rare opportunity to buy companies with Chinese consumers. In 2014, Chinese e-commerce giant Alibaba raised over $25 billion through its IPO, while online retailer JD.com raised $1.8 billion. Chinese social networking site Weibo, meanwhile, raked in a cool $286 million from the American market. At a whopping $1.4 billion, though, China package ZTO ranks as this year's biggest New York listing. But after making its NASDAQ debut on Thursday, just 24 hours later, the stock had fallen more than 15%. A curious and sharp fall from grace. So what's behind it? Well, joining me now to talk through this more is TRT World's Saurav Roy. Saurav, let's just talk through what went wrong initially, because it seems like it was fairly overvalued at the outset.
Absolutely. So this is a stock that garnered $1.4 billion, and that's a big deal given the fact that elections are around the corner, the markets are volatile, and there's uncertainty on interest rates as well. But I think what happened here is that the underwriters of the initial public offering...
These are the people that look at it and value it, right?
That's right. And these are the guys who got a bit overexcited, and they overestimated the market excitement, and so they put the price of the stock at $19.5 US, which was much above the bandwidth from 16.5 to 18.5 US. So that's where it all went down tumbling.
You can't blame them when you've looked at the previous Chinese IPO valuations, though. Just explain to me, though, why it is that these Chinese companies are so keen to come to places like the US and Hong Kong as well, outside of the mainland, to try and list themselves or list part of themselves?
So a lot of Chinese companies want to be outside of mainland China because getting listed in China by itself is an extremely arduous process.
Right.
It's lengthy, it's non-transparent, it's opaque, and nobody really knows what it takes to get listed on a stock exchange in China itself. And at the same time, if you are a Chinese company which has accepted investment from an investor, an overseas investor, you have no choice. You have to go and get listed on an exchange which is outside of China. Separately, the Chinese regulators, they keep changing rules, they keep changing framework as and when they want, and that's not really the best situation for a company which is trying to raise money from the public.
Great. All right. Well, we'll see what happens with ZTO. Saurav, many thanks for now.